Udah sampai belum?
Okay, hello guys, and hello everyone. I am Nora. It's very exciting to host the Crypto Market Insight session with our guest. Today, we are thrilled to have with us a guest who will be sharing the opinions on the market trends. As host of today's discussion, I'll be leading us through a thought-provoking conversation that promises to be both informative and engaging. So, whether you're an experienced crypto user or just getting started, we encourage you to sit back, relax, and join us for what is sure to be an enlightening discussion on this week's market performance, trends, and hotspots. While the live session is broadcasting on CoinW Live channel and the CoinW YouTube channel, welcome all to watch and leave your opinions or questions for market, coin, exact trend comment. And our guest will pick up some to answer, and I will mention that our audience can join CoinW official community to claim the 20 USDT rewards. Please check the live details for the link. And yes, in this part, we would like our guest to share your market insight session with any crypto tokens you want to talk about. Please be free to share your screen to let us watch your charts. Okay, firstly, let's welcome Dylan.
How's it, guys? Let me just share my screen quickly. Yeah. There we go. Hope everyone's having a good week. I just want to speak about, I'll mainly go over the altcoins first, and then we'll go over Bitcoin at the end. But basically, what I'm looking at for the total 3 chart, which is basically the altcoin market cap, and you can just see how price has just been consolidating within this pattern. And what I'm actually waiting for is if we get a breakdown here, I'm looking for a little bit of a price to take out this wick over here at 640 billion. So the problem is right now we kind of, personally not really doing anything until I see like a reaction off this zone. Like if we do get a bounce from this trend line, then I will be looking for a potential bounce plays. But this is not looking too good for the altcoin market cap. And if we do break below here, I'm looking at like a 10% decrease within the altcoin market cap, okay, which is even, looking left, you can even look for like 620 billion. So looking right now, it's not looking the greatest for the altcoins right now, and the same pattern is actually forming on Solana, right? So this type of pattern is like a rising wedge pattern on the weekly, also on the daily, but essentially this type of pattern is like a bearish pattern. And for Solana, if this were to break down, I will be looking to take a short position on the daily all the way back down to around $50 for Solana with stop loss around about like 95, just above that previous high over here. But yeah, it's not looking too good for the altcoins right now. And I just wanted to reiterate the fact that it's important to wait to see how the market reacts, because you could still get a bounce from this zone. I'm not saying that we can't, but personally, I will be waiting. If, like, let's just say this daily candle actually closes below this level over here, then I will be looking for potential sells on Solana, and that would coincide with total 3 as well. So yeah, it's a bit of in the market right now, it's very tricky. It's a lot of tokens, like even Ethereum, right, also not looking good back in the range. So we did obviously climb back above this level here for ETH, which is a lot of people were obviously screaming for a lot higher prices, but then you can see how we came back in the range. But we are still respecting trend. But I would personally just wait for price to close below here first before looking at sells, okay? Because they're still possible for the bounce. I'm not saying that you can't bounce here, but just looking at this chart, trading back in the range over here is not really a good sign for the market and for Ethereum. So let's just say, for example, we do close below this level over here, Ethereum can come back down to like the 1900s, where I'd be looking to take a short for ETH, okay? So yeah, for now, I'm more like leaning on downside. Obviously with the war and everything that's happening in the markets and rising oil prices and stuff, these riskier assets are going to take more of a hit. But I like to just trade what's on the charts, and what's on the charts is saying that we could potentially get a break to this level here, and we can expect further downside for Ethereum. Okay, so that's kind of what I'm looking at, and then also for Bitcoin, let's have a look at Bitcoin. So I've got a fresh chart. It's also pretty similar, right? So we have this level over here where most charts are looking very, very similar. How price is kind of consolidating upwards, but this could just be a new lower high for Bitcoin, which is not a good sign, right? And if that were to happen, then Bitcoin breaks below this level, we can look for a potential 60K push, even a little bit lower. So I'm just waiting to see what happens on the daily time frame. Obviously, on the lower time frames, you can look at like potential bounce plays. You can look at potential setups, because even if you look at the 4-hour time frame over here, it's not looking greatest, right? This type of pattern, if we were to break below this level here, we can expect price to continue lower. So I'm staying a little bit cautious in terms of looking for longs right now, because of the fact that we can't really get that push. Like even yesterday, we tried to take out the highs over there, but we came back down, and now we're at pretty much the support zone for Bitcoin. But I'm gonna watch the daily time frame to see if we were to break this level over here, then I will be looking to also catch a short for Bitcoin, back down to 60K, maybe a little bit lower. So yeah, more on the bearish side, but there is a possibility that we do bounce from these zones. But with most charts looking very, very similar, I would just be careful with entering like fresh long positions right now. So my suggestion, like what I'm doing is like today, I'm just waiting for the daily candle to close for tomorrow, just to see how we do close, because there's a possibility that we potentially close below this trend line, yeah, and then tomorrow you can look for potential sells. So yeah, right now I'm just sitting on my hands waiting to see how the market reacts within today. So we'll see what happens. But yeah, I'm watching these positions quite closely. So Ethereum, I'm looking for price to go there, and then just watch out for Solana, guys. I mean, this type of chart doesn't look good, right? I'll be honest. Like I've been saying this for Solana. Like I don't think it's going to do well. And looking at the chart right now, closing below here would pretty much send us back down to the lows, the low 50s / $60 level. So I'm watching Solana very closely, because there's a potential for us to break down here. So I have set an alert for this level. I think you guys should do the same. If we were to like break this, this $84 level, wait for a retest of 87, and then look for potential sell down. So that's kind of what I'm looking at for the market going into the weekend.
Okay, great. Thanks for Dylan. And about our community link, I think you can check in our CoinWX link, right? And next one, let's welcome Jay.
Yeah, hello. What up? Yeah, I don't know if I can share my screen right now. Give me a sec. Can you hear me, Nora? Yo, can you hear me?
Yeah.
Okay, give me a sec. Because I'm not at my video at the time. Give me a second.
Okay, let me check. Should we wait for Jay? Okay, I think he missed some network problem. And then let's hear from Lee first, I think.
No problem. Give me a second to share my screen first. Yeah. So yeah, actually, because the Bitcoin. Wait a second. here is, and I'm gonna open my screen here. Okay, so we see something from the key line, and recently Bitcoin remains kept it below 72,000, and with 4 major on-chain indicators showing weakened demand, which is actually is bad news, but not that bad. And Coinbase once again refused to support the new draft on the Clarity Act, and today, spot gold and silver has fallen by 2%, and the silver by 3%, and the macro and the geopolitical tensions continue to damage market sentiment. And with the Bitcoin showing reticence and panic, and ask at a risk aversion, interface and investors are repeating the movements like in 2022, like abounding stocks and bonds are trying to hold cash. This is one of the reasons why American stocks and U.S. treasuries currently declines. And so actually, basically from this kind of macro perspective, the price is currently still in the bottom and range with no bullish catalyst in sight. So we're gonna take the a key line and ETH as an example. So we find the immediate resistance seat as around 2,200 and forming a midly ascending channel. Here is a wild channel, and we from the chart, if the price break below this level, here, and the target, the downside target would be 1,100. Yeah, because it's going to break the upward channel. But I don't think it's not a big deal, because moving forward down, we look at around maybe 1,850 and this here, and which this position represent the recent low over the past few months, and unless there are negative macro deployments or bad news, but I don't think it's likely to be breached in the short term. So if it is breached or it's broken, we could enter a deep bear market. This here is the support level for the recent market. If it's broken, we're gonna jump a deep bear market. Yeah. So I personally believe there is still a decent probability from here. And after all, the bear market needs more time for the divergence to fully play out, and it means if the price holds steadily here, and we can still go long position, and targeting maybe take profits to 2,200, and the massive volume, and the breakthrough the strongly, and we can always let the profits to run. And also, this is actually the recent market from my side. Yeah.
Okay, great. Very clear. Thanks for Jay. And next one, let's hear from Persifine.
Hello, Laura. Hello, everyone. I'm currently mobile, so I might not be able to share my screen today. But I have some short things to say on Bitcoin and Ethereum, as I've been on the trade on both Bitcoin and Ethereum, and I had an entry point for Bitcoin at 67,500. We saw a move to the upside during the week to 71,000, although I have not closed my position just yet, because I expect it to, go higher to 74, actually 73, or getting all the way to 74 again. I think it has actually done that this month too. That's gotten all the way to that price this month, but I still expect it to move to that level currently. So I also have a similar structure for Ethereum too, although I'm surprised that Ethereum is going towards the downside in just 24 hours, because it's it actually went up from 2023 all the way to 2131, which was expected, and I think it got to 2194 actually. So I was expecting it to go higher than that to meet the former high it went to, which was 2 2 or even 2 3 actually. But then surprisingly, is dropping, coming back to the downside. And the recent move to the downside, wasn't foreseen obviously, because I've not found the reason for the current drop actually. But left to me, I'm moving my breakdown or my break even. Sorry, I'm moving my break even to the entry point that I have on Ethereum, because I have a trade on Ethereum and Bitcoin, a buy trade on Ethereum and Bitcoin. So with this recent move to the downside, I would like to see where price will create a new support level, or if price is going to react from a previous support level that it was, and this would also determine if I'm still bullish in the 4 hour time frame, and also if I'll be willing to take any more buy trades, because currently the market seems to be consolidating and I don't think it's moving in a bullish level currently. I don't think it's moving in a bullish level currently. But if price, were to take out the 65,000, this is for Bitcoin. If price takes out the 65,000 level, this would be that I'm going to have a temporary change to the bearish, and also look for a sell trade on Bitcoin actually. If price breaks down the level of 65,000, it means that the market is, you going to the downside, and it means that most of the coins are going to drop. So this indicates that there will be a sell trade on most of the coins like Bitcoin, Ethereum. I've also been looking at BCH, and most of the coins are actually dropping currently, especially SU2. So the market is really consolidating currently, and I'm hoping for it to go on the upside a bit before now dropping more than this current level. So yeah.
Okay, nice. Thanks for clarifying. And yeah, we can dive into this part. I will share my screen. Yes, we have some questions for our traders. And the question one is, with ongoing geopolitical conflicts causing sharp volatility in oil prices, is there still an opportunity to invest in oil-backed tokens XTI in the crypto market? And for this question, let's first invite Dylan.
Yeah, so I do think there's opportunity in oil-backed tokens like XTI, but you have to approach it the right way. So, like what we're seeing right now is a very macro-driven environment where like geopolitical tensions are pushing oil prices higher, and that creates a strong narrative around commodities, right? So the interesting part is that XTI gives crypto traders exposure to move without leaving the crypto market. Okay, so I think that's one of the biggest factors. So it can act as a rotational play with traditional crypto. With traditional crypto is slow and, or under pressure. Okay, so that said, it's not something that I'll treat as like a long-term investment because it's obviously due to the war and stuff. Um, but both oil and crypto plus liquidity, there is trading risk that involved in that. So for me, it's more of a short-term opportunistic trade based on the macro story rather than something that I'd hold for the long run. So basically what I mean is, I think with what's being said, there's always with crypto, there's always narratives. You have meme coins, you trade meme coins the 1 week, and sometimes you'll get like Pepe or Floki that pop off, and then sometimes you'll get RWA that pops off. So I think with this, you can trade it in the short term, but I wouldn't hold these tokens for a long period of time. It's basically just within this like within the next like 1 to like 4 months. You know what I mean? So I wouldn't hold these tokens for you're holding XRP or Ethereum for years, or Bitcoin. So I think it's more of a short term play. That's my opinion.
Analysis. And then we have a question from the comment. I think I
Yeah.
can show it in the screen. Yeah, to what extent can Bitcoin decouple from traditional stock index to become a true digital gold? Can you see it?
Yes, yeah, I can see it. Let me see, to what extent can Bitcoin decouple from traditional stock indices to become a true digital gold? I think with this question, I think a lot of people have been speaking about this for a long period of time. Um, I honestly think that, I mean, right now it's still, it will never, like, it will take a while for that to happen, just based on the fact that, you know there's not much, a lot of people don't view it as that way, and also banks and also institutions aren't pushing for that. I think it's always been, everyone's kind of viewed it, as that, as a way of that such. But personally, I don't think it would ever get to that point, just because of, the whole, cutting out the middleman. And yeah, so for me, I mean, it's quite a hard question to answer. But yeah, I don't know. Maybe you can ask someone else about that question.
Okay, great. Thanks for Dylan. And let's back to the question one. Next one, let's hear from Lee.
Okay. Yeah,
Okay, Lee,
crude
can
oil
you
experiencing multiple intraday fluctuations and exceeding 5%. And the traditional future offer high leverage but come with significant barrier to entry. And oil-linked RW tokens backed by physical assets futures such as XTI remain niche sector into the cryptocurrency space and characterized by the thin liquidity and the large split. However, precisely due to the high volatility, there are clear short-term opportunities for this asset. And if the conflict, continues to push oil prices to stabilize within the 80 to 90 range, and XTI can serve as a low share hold beta play, likely to follow the upward trend. For my perspective, this remain a tradable window, maintain a low position, set strict stop losses at oil price support levels upon retracement, but avoiding going all in. And this risk associated with RW projects developers and the probability of decoupling are not low, and making it a high risk, high reward short-term trade rather than a long-term holding. Yeah, from my side.
Okay, great. Thanks for your answer. And yeah, we also have a question from the comment. Yeah, I think you can see it. With rising oil prices and market crash, what is the future of cryptocurrencies?
Oh, I see. I see. What is the future of cryptocurrency? Yeah, actually, I don't think it. I just want to say no worries. Yeah, because oil prices are experiencing a technical correction first, which is very normal. And besides the technical corrections, gold also faces the issue of being surpassed by high interest rates. The future of cryptocurrency, I would like to say, is relatively stable. Firstly, the reason is cryptocurrencies possess long-term safe haven attributes while behaving like high risk assets in the short term, but in the long term, it's like gold and this kind of asset. And even though there has been only one interest rate cut this year, it is not generally bearish for the cryptocurrencies market. And secondly, from the 2024, many institutions hold cryptocurrencies and driving up the average price and making a significant decline. It's not that high, easy to decline. Yeah, it's unlikely to decline too much. Like in 2020, 2021. Yeah. So finally, it is estimated that cryptocurrency will need a longer period of consolidation, in my personal opinion. And once, maybe the next year or the end of this year, macroeconomic conditions improve and asset price like stocks or kind of stuff rise across the board, the cryptocurrencies will experience even better and greater gains than this kind of assets. Yeah, so no worries from my
Okay,
side.
great. Let's be optimistic. Thanks for Lee. And back to this question, then we invite Persify.
All right, so I think that some oil based or all background tokens like XTI can still be invested in, and they can still offer more opportunities even during this period. But it is very important that you um use a very huge risk factor. Actually, it is no news that whenever anybody is trading or whenever anybody is investing in a particular thing, it is important that your risk factor should be very huge. You should invest an amount that you know that you can lose, and ready to do away with. So this investing in oil backing token is actually still very good, and you can actually still get profits from it, but it is just very risky, since they are both stable on oil market, and also the crypto market is very volatile. We know that the oil market is unpredictable and the crypto market is very volatile. So this actually makes it very risky to invest in it. But yes, you can still get some opportunities from oil backend tokens, but it's just that the risk is very high, and it might not be safe. We just have to be careful and invest wisely, and also use a very huge risk factor.
Great, thanks for clarifying. And then I think Jay, you can do the market analysis first, then answer the question one.
Sorry, Nora, I cannot share my screen right now because I'm in the doctor right now. I'm kind of, but I can help you guys, support you guys by talking, if you mind.
Yeah, sure.
So, what's the question?
Uh, you can't see my screen?
Yes, I
You
can. Hold on, yeah.
okay? You mean you can't
Uh,
see the question?
yeah, I can, but I cannot share my screen. Okay, so with the oil back token XCI, uh, no, I don't think so. I don't think so. Somehow, oil is overextended. Maybe you can make it to the a little bit 100 above, like, excuse me, 120 or something. But I don't think so, guys. So be careful with oil.
Great, thanks for Jay. Uh, and we miss crypto minister, right? And I think Jay's network is not very good, right? Because then I think let's dive into the question two. Why did gold experience such a sharp pullback over 8% when Trump's peace signal emerged, even as geopolitical risks remain highly uncertain? And this question, let's first hear from Dylan.
Yeah, so basically, like what you saw, it was a classic like risk premium like move. So gold has been pricing in a lot of fear from the geopolitical attention. So when Trump's peace signal hit the market, even though like nothing was fully resolved, it was enough to shift the sentiment. Okay, so markets don't wait for certainty; they react to changes in the expectations. So traders quickly, traders will start taking profits on the fear-driven like rally, which caused the sharp pullback, in my opinion. So at the same time, you likely had a move in a risk on assets like equities and and then the stronger dollar, both were putting additional pressure on gold. So it's not like the risk like disappeared. It's it's the fact that the market had already priced in the worst case scenarios. So when the narrative softened very slightly, you got a fast flush on positioning. So I think it was just it's about the uncertainty, and the markets don't wait for it. So yeah, that's kind of my opinion.
Nice, thanks for Dylan. And then we hear from Lee.
Yeah, and basically, the over like 8%, I remember, plug in the gold prices this time in is a classic example of sell the price scenario, and Trump's peace signal, most likely a tweet or statement hitting at cooling U.S. Iran and negotiations instantly shattered the world premium already priced in the market, and promoting institutions and the CTA funds to collectively close out long positions and taking profits. And although geological risks remain highly uncertain, Yeah, so traders actually only focus on marginal changes to take profits as long as there is the escalation narrative and the gold is immediately treated as a risky asset, and coupled with the rebound in the US dollar index and raising real interest rates, and the gold faces double pressure. For crypto traders, this also served as a reminder macro narratives can shift faster than fundamentals. So everyone should remain vigilant about risks. Yeah.
Okay, right. Thanks for Lee. And next one, let's hear from let me think, press fine. Yeah, press fine first.
Okay, so I think because of the current war going on, in people are likely to feel scared about of the ongoing war, and obviously when you feel scared about your money, it is very obvious that you're just going to withdraw most of the money that you have in some investment. So and I think Donald Trump actually made a tweet on, I think he made a tweet some days. So obviously people saw it, and then investors were scared, and you know made them to withdraw some some funds from their investments. Yes, so even though there is uncertainty in the market, the market, and obviously even the crypto markets react fast to any news. That's why you see that um when a particular high-end person comes to say a thing or two on crypto, the market reacts very fast to it. And I think it's the same way for the oil market too. The market reacts very fast to any news, whether good or bad news. So gold can quickly fall, basically, and when it falls, it means that most investors are scared about leaving their money and losing their money too.
Right. Thanks for press fine. And last, I think, crypto minister, you can first share your market analysis, then answer the question too. Okay, crypto minister, can you hear me now? Okay, it's okay. We can wait for a few minutes. Mm, I think crypto minutes can't hear us. Some network issues, right? And I think we can uh, dive into the question three, right? More broadly, what kind of impact is the current US Iran conflict having on the entire crypto ecosystem, including DeFi, NFTs, Layer 2, and meme coins? And this question, let's first hear from Dylan.
Yeah, sure. Sorry, I was just trying to unmute myself. So let me just read a bit more broadly. What kind of impact in the current US conflict? Um, okay, yeah. So basically, what we're seeing with the US Iran conflict is not just like moving prices. It's shaping how the whole crypto market behaves. Okay, so crypto is reacting like a risk asset. So when the tensions rise, we get sell-offs and volatility, and when things calm down, we get quick relief rallies. But the key shift is that crypto is not the first market to react to this global event because it trades 24/7. So the real price discovery happens here before traditional markets. Okay, so across sectors, DeFi sees volume spikes, but liquidity can also disappear fast. Okay, so like layer two activity follows overall sentiment. NFTs usually get hit first as risk comes off, and then like meme coins are the most sensitive to the narratives due to how volatile they are as like a there's no like actual backing behind them. So overall, this kind of environment like makes crypto more reactive, so more narrative driven and a lot faster moving than before, in my opinion.
Okay, great, Dylan. So, is there any tokens you can recommend to us?
With I mean, personally, I'm just staying with Ethereum and XRP because I honestly think that XRP is one of the it's pretty much the only token, and Hype. It's also the one I'm looking at. The reason why I like XRP is just because you know they're backing, they literally signed a contract with MasterCard 2 days ago. There was also like a post where JP Morgan might be integrating XRP, which is obviously not true yet, but I saw there was like talks about it. So I think that is the one of the safest tokens, and obviously Ethereum and Bitcoin. Yeah, so those are the three that, and then also Hype, just because of the chart. I didn't actually show it in the beginning, but I do think that Hype is one of the tokens that is a good position. I'm actually looking for an entry around like $33. So if Hype were to get down to 33, then I would be looking at a potential move to the upside.
Okay, nice. Thanks for your answer. Well, I think Crypto Minister is back. Bro, can you hear me?
Can you hear
Oh,
me?
yes, nice.
Okay. Yeah, thank you. Let me share a little bit of my. Can I share my screen?
Sure.
Can I share screen?
Yes, you can share the screen first, then answer the question.
Oh, okay. So the market. Let's just go like this. I don't really have much on the screen right now. The news from the president of US that the strike on Iran's energy plants will be suspended has really disrupted a lot of market structure for me. To be very honest, the markets for the week, especially since on I think since on Wednesday, since on that the news were, and the spike was very, very obvious. The spike invalidated a lot of short position I was in. So right now we can see BTC again back to 69K or thereabout. So currently at the next demand zone. But then if we should consider normal market structure, the market should go down lower. But with the news from Donald Trump on ceasefire or no ceasefire, we might get to see some reactions again, which I don't even know, because right now it is looking as if this sentiment from the war at Middle East is really impacting the market, the market movement. So right now I'm going to be on sideline to see what the market has for us in the coming few days. So I'm going to be mostly inactive on the sideline trying to see. So to the question, the kind of impact the war is having on the entire crypto ecosystem is very obvious and clear. Of course, negative, since negative sentiment affects the crypto sector in general. Just as you can see, though it was very surprising that on the day of the war, the following day, the market pumped. The market pumped was very, very, very surprising for me. It was very, very surprising. But on overall analysis, it's going to definitely has impact, considering the fact that Iran as a nation is one of those leading countries that contribute to BTC mining. And beyond that, the panic it is creating generally, whether they're going to put a stop to the war or not, one way or the other is going to have effect. The only thing I feel like perhaps the sector that is a little bit shielded from the issue is probably NFTs. But if you check the whole narrative in the crypto, especially for the last couple of like a year or two, most most ecosystem are not really doing, they are not really thriving as expected, aside BTC and Ethereum that did some all-time high, and I think BNB. So in general, the impact is definitely negative. Everybody's hoping that one of these days we are going to hear that the war between Iran and US has finally been settled, and then the world is back peaceful again.
Okay, right. Thanks for your answer, Crypto Minister. Then let's back to the question 3. Let's hear from Lee.
Yeah, we are going to talk about so many different assets. So because U.S. Iran conflicts represents a classic risk-off plus localized safe haven double below to the entire cryptocurrency ecosystem. So basically, we talked about BTC or this kind of meme chains, and short-term capital outflows, well, BTC likely to retest support near around maybe 70K, and accompanied by sorting volatility and temporary institutional position reductions. And switch to DeFi, maybe TVL declines with a surge in demand for stable coins like USDC, USDT, and abandonment of high risk yield farming and lending rates initially surging before stabilizing. Yeah. And about NFT, maybe I think the first to be suffered is luxury attribute. Yeah. And with floor prices collectively crashing, and even blue chip some assets not spared. So I maybe layer 2 transaction volume shrink, absolutely, and gas fees remain low, and user activity declines, temporarily shifting the ecosystem narrative out of focus. And if we're talking about meme coins, it's the worst, because in the most brutal impact with retail panic selling leading to potential 90% crashes, and because the probability of newer themed meme coins like oil or military safe haven memes experiencing violent release. So overall, the conflicts intensifies cryptocurrency volatility, but may indirectly benefits, for example, RWA, oil, gold, commodity-linked kind of assets, and decentralized safe haven narratives. And if you're a trader, and so your current strategy, I would say, include reducing high beta positions, was very important, and holding stablecoin, drawing power, and waiting for the war or geopolitical clarify before bottom fishing or switching sectors. Yeah, is my opinion.
Okay, great. Thanks for your insight. And last one, let's hear from Persify. Okay, Persify. Okay, great.
Okay, like I said earlier, when there is conflict or war, then people get scared and uncertain about the market. So but coins, stable coins actually, stable coins are being used. And
Uh,
can you hear me?
yes.
Yes, sorry, so sorry about that. Yes, stable coins are being used, to hold money in digital dollars, and also DeFi is being used, payment, and also the layer 2 networks are also being used. So this actually, are in use. But when it comes to meme coins, I don't really, trust meme coins, because a lot of people just, create meme coins, and then it's always very risky. It's always very risky to invest in meme coins. So I don't really trust meme coins, but other ecosystem like the DeFi, the layer 2 network, stable coins, and I don't really think NFTs are, being used currently, but DeFi, layer 2 networks, and also stable coins are currently being used. And
Okay, thanks for participing. And guys, that's all the question for today. And thanks for our guest for sharing the market analysis. And be sure to keep an eye on CoinW and our esteemed guest. Follow their Twitter account as they will continue to share valuable insights on the world of crypto. And this is all the time for today. Yes, thank you guys.
Thank you. Cheers, guys.